Good morning. Welcome to Market Monday for November 13th, 2023. Quick note, due to the business travel and Thanksgiving holiday, Market Monday will be on hiatus for the next 2 weeks, picking back up on December 4th. I know, what will you do without us? Something tells me you'll be just fine.
But you're not actually relieved about our hiatus, are you? Must have been the 26 ad nauseams since August 14th. That's right, we said, and you tolerated 26 times we used the term ad nauseam. But in the beginning, with the very first one on August 14th, we told you why we were doing that. We told you how long they would last through precisely right now, because all sorts of seasonal weakness happened during that time.
Like this one, and this one, and this one. How about one more for good measure? Do you remember on October 2nd when we said the noise would be turning up, that the bearish headlines were going to get more attention? Did these videos help? After all, while seasonal patterns have been eerily accurate this year, at the end of the day, they're just probabilities and certainly don't have to come true.
But so far, they have. Right on schedule. Where's investor sentiment? More bullish than bearish in mid-October. Equal a week later, then close to the recent bottom, it flips bearish. And literally, just before one of the best weeks in the market, certainly this year, maybe more, folks are twice as bearish than bullish. Folks, no one likes tolerating declines in the stock market, especially long drawdowns like we're in now. But we have to participate in the upswings too. Not every penny necessarily, but we do need to participate in the upswings as well, if we want to achieve those long-term stock market returns that we read about.
And going back a little bit further, up here is about a month after the market bottom last year. High bears to bulls. And where did the market peak? Right here, where the bulls peaked and the bears bottomed. And we know the rest of the story, but us telling you about the bearishness, the headlines, the noise, the chatter, the fear, the anxiety, even ad nauseum, it still doesn't quite prepare us for actually being there in the moment, day after day, red on screen, calls for recessions. When's the next leg going to drop?
Just as we looked at last week, where it seems after COVID, there has been a stark shift between our perception of things and how they really are. We can sit here all day and preach, fade the noise, and we should, but it's a lot easier said than done. We believe this is a new feature of investing, stock market, bond market investing, is if we're relying on these markets for something, why else would we invest in them in the first place? The more we're relying on them for, the harder it's going to be to tolerate not just the volatility inherent in investing, but the noise, the chatter, the anxiety, the uncertainty that the media and social media perpetuate and profit from.
And one way they do that is to push us into tribes. We're a tribal species, but not only that, humans are always trying to make sense of the world around us. Why are we here? What's next? And one thing humans love to do to try to understand things, we label them. We love to label things. Combine tribes with labels and you've got the perfect storm of media noise and manipulation. Bull, bear. Fear, greed. Recession, no. Robust growth. Unemployment's low, but it's rising. High oil prices will cause recession. Low oil prices will indicate recession.
And on and on and on. There are always two sides to the coin. Rest assured, the media will point that out, spiked with confusion and anxiety. We also want to point out both sides of the coin, but with context and a sober approach.
To that end, what are we seeing out there right now? For one, economic growth is high, just under 5%, all while absorbing one of the fastest rate hiking cycles of all time. But inflation is still too high and a little stickier than we'd like. People don't like inflation, especially sticky inflation over a number of years. But on the other hand, wages have largely kept up with inflation. Generally speaking, many folks have been able to at least hold their own and not fall too far behind. And unemployment has been low. In fact, unemployment was never this low, not even once during the 70s, 80s, or the 90s. And we know if people have income, they're gonna spend it.
But unemployment is rising. We went from a low of 3.4% to 3.9%. There's a body of research out there showing a 0.5% increase in unemployment, like we've just had, tends not to stop there. Here's a look at a dozen other times that happened. Starting low unemployment rate in the month it happened here, when it increased by 0.5% here, and how many months between the 0.5% increase and the start of recession. Clearly, it wasn't too long. And in fact, sometimes we were already in recession.
But see, this goes back to the labels. The NBER, the official arbiters of recession in the US, here's their website, quote, "A recession is the period between a peak of economic activity and its subsequent trough." That's the issue causing so much confusion. If the economy deteriorates significantly from here, even months and months into the future, the peak will have been the third quarter of 23, that strong 4.9 GDP reading we just had. That's when the recession will have officially started.
So when we hear labels like recession, like bull or bear market, let's remind ourselves to actually look at what's going on rather than slapping a label on it. From all of us at Market Monday and Collaborative Wealth, happy Thanksgiving. We'll see you in December.